Hello, I'm Laura Anderson, OSCR's Head of Professional Advice and Intelligence. I'm here as part of a series of webinars that we're doing about charity accounts to help you understand the basics about receipts and payments accounts. The agenda for today. Firstly, I'm going to do a recap on the basics of charity accounting that I covered in the first webinar in this series. Then I'm going to look at who can prepare receipts and payments accounts and the rules around that. I'm going to then talk about the basic elements that are included in a set of receipts and payments accounts. And then I'm going to look at the difference between receipts and payments accounts and accrued accounts, which are the other type of accounts that charities can prepare. I'm going to then follow up by looking at the external scrutiny of receipts and payments accounts. And then finally, we're going to look at what other guidance and help OSCR's got to help you through this process. So let's do a recap on the basics from webinar 1. All Scottish charities have to prepare accounts and file those with OSCR within 9 months of the end of their financial year. You have to file your accounts using the OSCR online system. That means you complete your annual return and you file your accounts through our electronic portal all at the same time. There are 2 different types of accounts that charities can prepare. The first is receipts and payments accounts, and that's what we're going to look in detail at today. And the second is accrued accounts, and I'm going to cover some of the differences between the two later on. Firstly, let's be clear about who can actually prepare receipts and payments accounts. And for ease of reference, I'll talk about R&P accounts when I'm talking about receipts and payments accounts in this presentation. For a charity to be eligible to prepare receipts and payments accounts, its income must be less than £250,000. Receipts and payments accounts can't be prepared by charitable companies. And this is because charitable companies are bound by company law, which requires them to prepare accrued accounts. So charitable companies must always prepare accrued accounts using the SORP. We'll look at that a wee bit later on. So if your charity has income of less than £250,000 and you're not a charitable company, then potentially you're eligible to prepare receipts and payments accounts. However, you should also check the requirements of your charity's governing document to see if it specifies anything about the form of accounts that should be prepared. If your governing document refers to accrued accounts being prepared or true and fair accounts being prepared, that means you have to prepare accrued accounts and you cannot do receipts and payments accounts. Of course, you could also consider changing the terms of your charity's governing document to allow you to prepare receipts and payments accounts where appropriate. You would need to ensure that your charity's governing document provides you with the power to make that change. You might also need to consider what any funder for your charity actually wants in terms of a set of accounts. Some funders can be quite prescriptive in terms of wanting a set of accrued accounts, and they won't be happy if you prepare a set of receipts and payments accounts. However, in that type of situation, it's maybe worth trying to have a conversation with your funder to properly understand what information it is that they're looking for, so that potentially you might be able to still prepare receipts and payments accounts and perhaps supplement that with something that they're looking for. So, let's then try and look at the actual requirements for receipts and payments accounts in a bit more detail. The basic premise of receipts and payments accounts is that they're really cash-based accounting. It's really following what the charity has actually received during the year and what it's actually paid out during the year. There are 5 elements to a set of receipts and payments accounts. The first is the receipts and payments account itself. Then there's the statement of balances. That's when the assets and the liabilities of the charity are listed. Then there are some notes to the accounts. The trustee's annual report, that's where the charity has the opportunity to tell the story about what's been happening during the year. And finally, there must be an external scrutiny report, and I'm going to talk about that a little bit later on. Within receipts and payments accounts and also accrued accounts, it's really important to show the different types of funds separately that a charity has. By this, I mean the different types of funds in terms of unrestricted, restricted, and endowment funds. There are separate columns that should be shown in the accounts for each of these different types of funds. Many charities might only have unrestricted funds. Others will have restricted funds where perhaps they have received a specific grant for a very special project. That's always then marked as restricted funding. These two things have to be shown separately. I'm going to walk you through actually what the receipts and payments account actually looks like. What you can see on the slide here is an extract from our receipts and payments template that we have available on our website for anyone to use. If it's not really clear for you to see, if it's a little bit small, there's a link to the slides in the description for this video, and you'll be able to look at the slides in more detail. But equally, you can look at the workpack on our website and you can download these templates and study them in detail. What you're seeing on the screen at the moment is the top half of the statement of receipts and payments, and this is the part that purely deals with receipts, the money that the charity has actually had in during the year. The descriptions that are shown for receipts are the ones that are required to be shown by law. Firstly, you've got donations. So this would be where you've perhaps received donations from members of the public. Then you have legacies, money that's perhaps been left to you in a will. Grants will be grants maybe that have come either from individuals or more commonly from an organisation, could be a local authority for instance. Then you have receipts from fundraising activities. Perhaps you held a coffee morning during the year. That's where your money coming in goes into your receipts and payments account. Then you've got gross trading receipts. The charity may, for instance, run a small charity shop, and you would show the money that had been received by the charity shop in this line during the year. Next comes income that's come from investments. The first line is income from investments other than land and buildings. This may be dividends that the charity has received on some shares that it owns. Then separately you show rents from any land and buildings that are owned. And then the last category, gross receipts from other from other charitable activities, that's really a mop-up section where you can put any other income that's come in during the year. A good example of this might be where the charity has actually received a payout following an insurance claim, or it's received some compensation after some event. The two lines below then show receipts from asset and investment sales. So if the charity has a small portfolio of investments, for instance, and it's perhaps sold some of those investments, it would need to show the proceeds from that sale separately. Similarly, if it sold a fixed asset during the year, it needs to show the money that it's actually received from that sale separately. So a good example of that might be if the charity has sold some of its equipment during the year, it needs to put in the disposal proceeds that it's received on that line. All of these together then go towards showing you your total receipts, and that's your gross income for the year. You'll also see, as I referred to earlier, there are different columns on the receipts and payments account, and this enables you to split down your unrestricted, your restricted, and any endowment funds that you hold. Endowment funds can be expendable, that means you're able to spend the money in certain situations, and they can be permanent. A permanent endowment fund is where you can spend the income potentially from that fund, but you cannot spend the capital. The capital could be an asset, such as an investment asset, which is held by the charity to provide longer term income. The far column on the right hand side shows the funds that had been received in the last period. It's really important in accounts to show the comparable figures for the last accounting period as well as the figures for the current year. Next then, we're going to look at the bottom half of the receipts and payments account, and this is where we record the payments. Again, the descriptions that are shown on the lines here are the descriptions that are required by law to be used for your payments. So firstly, we've got expenses for fundraising activities. So earlier on we talked about an example where you might have held a coffee morning during the year, and you would have shown the money that you'd received through that coffee morning in the receipts line. This is where you would actually show the expenses which had been associated with that coffee morning, for instance. Next, you've got gross trading payments. Again, remember the example that we spoke about earlier. If the charity has a small charity shop, then its receipts are shown in the top half of the account, and any payments or any expenses relating to that trading activity are shown on this line. Next is investment management costs. So if a charity has maybe a small portfolio of shares, for instance, This would be where you would record the payment made to the investment manager. Then you have payments relating directly to charitable activities, and this is where the majority of your payments are likely to sit in this line here. Next is grants and donations. If your charity has made a grant to somebody else, or perhaps given a donation to another charity with similar purposes, for instance, this is the line that it would be shown on. Then we have governance costs. Governance costs are incurred in the process of actually helping the charity to function. So you might have had to pay a fee, for example, for an audit or an independent examination of the accounts to be carried out. Similarly, you might have paid someone to help you actually prepare your accounts. You might also have some legal costs during the year, or indeed there might be other costs that you've incurred to help you actually run the charity. There are separate lines for each of these categories. You then have a subtotal after those payments. The two lines below are where you record purchases of any fixed assets, for example equipment, during the year, and any purchases of investments. We talked earlier about where you have maybe a small investment portfolio and you sell some investments during the year, and you record the disposal proceeds that you've received in the receipts line. So this is just the converse of that. If you've purchased some investments during the year, how much did you pay to purchase those investments? Or how much did you pay to purchase a new piece of equipment? That's a payment of a fixed asset, a purchase of a fixed asset. All of that together goes towards giving us a figure for total payments during the year. And the difference between the total receipts and the total payments will give you either a net receipt or a net payment figure in the year. So if your receipts are more than your payments during the year, you'll have net receipts. If your payments have been more than your receipts, you will have a net payments figure there. You might also have some transfers to or from funds. So for example, you might have had a transfer from an unrestricted fund to a restricted fund to plug maybe a small shortfall that you've had in some of your restricted funding in the year. The very last line then is the surplus or deficit for the year. And this figure is really important because we're going to see how it relates in the next slide on the statement of balances when we're looking at the difference in the bank and the cash figures from the start to the end of the year. So that's all that we've covered so far in terms of the statement of receipts and payments. So next is the statement of balances. The statement of balances really allows the charity to record the assets and the liabilities that it has at the end of the year. The most important part is right at the top of the statement of balances. And on the slide here, you can see the extract from our receipts and payments work pack, the very top bit, which is where you use the surplus or deficit figure that we had on the bottom of our receipts and payments account. And we use this to help us understand what's happened to the cash and the bank balances between the start of the year and the end of the year. An example here would be if you had £100 in your bank balance at the start of the year and you had a surplus of £50, so that's the difference between your receipts and payments in the year, so your receipts and your payments were £50 difference, then that means you would have £150 in your bank balance at the end of the year. The statement of balances also has to list other assets, that's things that the charity owns, and it has to list liabilities, that's items that are due to be paid by the charity as well. So assets could include equipment that your charity has, it could include investments, and liabilities might include bills which you had not received until the end of the year but still related to the accounting period. The next element is the notes to the accounts. The notes to the accounts again are prescribed by law, so these are things that you must include in your notes. They're very simple things that you have to include here. So if, for example, you have different types of funds, you need to explain to any reader of your accounts what the nature and the purpose of those funds are. So if you have restricted funding, for example, that you've received for a special project, explain what the project is and what the purpose of it is. If you've paid grants in the year, you need to explain the reason that you've paid that grant, explain who you've paid it to, how many grants you've given, and how much you've paid out in grants as well. Again, we have a template on our receipts and payments workpack that helps you to get this information right and will give you an idea about how you could present this information quite simply. Next in the notes to the accounts are payments that are made to charity trustees and people who are connected to charity trustees. So included here would be any remuneration that's been paid to a charity trustee or to a person connected to a charity trustee. People that are connected to charity trustees include family members. There's also a detailed list in our Guidance and Good Practice for Charity Trustees document that helps you to understand fully who connected people are to charity trustees. Also included in payments to charity trustees would be any expenses that have been reimbursed to a charity trustee during the year. There are separate bits on our template to help you present this information correctly. I would also say that these are the minimum requirements that you can include in your notes to the accounts. But the key is really to help the reader of your accounts to understand what's happening in your charity. So you can add a lot more information if you want to, and you think it will be helpful to other people in understanding how your charity is functioning and it's carrying out good work. The next bit is where we move away from numbers and we look more at the words. We look at how the charity trustees are trying to really tell the story about what's happened during the year. This is the key opportunity that charity trustees have to really sell their organisation, and it can often be used as a good promotional tool by charities, particularly when they may be looking for extra funding. All charity trustees should be actively involved in the preparation of a trustee's annual report. You don't have to be an expert in figures, you just have to understand what your charity is doing and how it's doing it. That's what readers of your trustee's annual report really want to know and understand. I would really suggest that you keep it simple and you use language that's appropriate for the charity and for the people who you expect to be reading your report. You don't have to use complicated language, don't use jargon. In fact, that can often put people off. Keep it nice and simple in a language that everyone can understand. Think about who the readers of your report are and try and speak directly to them. There are certain things that must be included in the trustee's annual report, and these are listed on the slide. These are really basic details that trustees should be able to talk about and explain really quite simply. So we start, for example, with administrative details. So be clear about the name of the charity, its Scottish charity number, that's the number that starts SC0 followed by 5 figures. Talk about the address, explain what the address of the charity is, the contact details. Then go on to explain who the charity trustees actually are. Give their names and the dates that they have acted as charity trustees. So for instance, if they were only appointed part of the way through the financial year, explain the date that they were appointed on. Also explain who appointed them. If another person or another organisation has the power to appoint charity trustees, this should be explained in the trustee's annual report. Also, if any person was a charity trustee at the start of the year, but perhaps resigned partway through of the year, then explain provide the detail as to the date of their resignation. Then go on to explain the type of governing document that the charity has. So, for example, is it a trust? Give details of the trust deed. If it's an unincorporated association, explain the terms of the constitution. Provide any details that you have about how trustees are appointed and also how they are recruited. What methods of recruitment does the charity use? Does it openly advertise, for instance, when it's looking for charity trustees? Does it have quite a defined process in terms of going through a look at what skills it needs on the trustee board and then seeks to recruit someone to fill those particular skills? What actually happens in that process? Do explain that. Then go on to talk about the charitable purposes. This is the very reason that the charity exists. If you're clear about why the charity exists and what it's trying to do, trying to then explain what activities the charity has carried out during the year should be a lot easier, because it will be clear as to why those activities have taken place. And also explain the fantastic achievements that your charity has experienced during the year. Really use this opportunity to tell everyone about the good work that you're doing. Following that, you need to explain the reserves policy that the charity has. This is money that the charity ideally should have in reserve in case something happens that means the charity experiences perhaps a decline in its ongoing funding. How is the charity going to keep going short term, pending perhaps the securing of new funding? We have a reserves fact sheet available on our website that helps you to think about what reserves are appropriate for your charity and how perhaps you can have a conversation around your trustee table about this. If you've experienced a deficit during the year, so that means that your payments have been more than your receipts, you should explain this in your trustee's annual report. There can often be a whole host of very good reasons why this has happened. Perhaps there's been a very unexpected item of expenditure, for instance, that's happened perhaps close to the year end, and this is the reason that the charity has a deficit. These things happen. They happen to everybody, not just charities, and explaining that is really what readers need to understand what's been going on. Lastly, explain to the reader of your accounts what donated services and facilities you've received, if any. So, for example, if an independent examiner has donated his or her services to you free of charge, you should explain that. In terms of facilities, perhaps trustees have been provided with use of a meeting room to enable them to hold their trustees meetings, or perhaps an AGM, and they've been maybe provided that free of charge by an organisation in their local area. Explain that in the trustees' annual report to help other people know how your charity actually functions. Next, we're going to look at the difference between receipts and payments and accrued accounts. As I spoke about earlier, there are two different types of accounts that charities are allowed to prepare. We've been talking primarily here about receipts and payments accounts, which are cash-based accounts. We don't make any adjustments in receipts and payments accounts for the timing of any transactions. So we don't have debtors or creditors, for example, as you would see in accrued accounts. Accrued accounts are prepared following the Statement of Recommended Practice, or the SORP as we often talk about. And these present all transactions that relate to the financial year, not just where cash has changed hands, but also where we take account of timing differences. A good example of this is perhaps where the charity has received an electricity bill after the end of its financial year, but that bill actually relates to the financial year. In a set of accrued accounts, we would include that in our expenses because it does relate to the financial year, even though we haven't received the bill until later on. But this wouldn't be included in a set of receipts and payments accounts because the money to pay the bill wouldn't have left the charity until after the year end. So that's a good example of a key difference between the two types of accounts. External scrutiny of accounts is something that's very important. Every set of charity accounts prepared by a Scottish charity has to be externally scrutinised in some way. There are two different forms of external scrutiny. There's independent examination and there's audit. When receipts and payments accounts are prepared, often an independent examination is what takes place. The independent examiner doesn't need to be a professionally qualified accountant to do an independent examination of a set of receipts and payments accounts. However, key things to remember are that the person doing the independent examination needs to be independent of the charity. So they can't, for example, be a charity trustee or someone connected with a charity trustee. So they couldn't be a family member of a charity trustee, for instance. The independent examiner also needs to properly understand the legal requirements for charity accounts. They need to understand what accounting records are and how they should be prepared. And they need to understand the relationship that exists between accounting records and charity accounts, because the independent examiner needs to be satisfied that the accounts are a good reflection of the underlying accounting records. So while that person doesn't need to be professionally qualified, they do need to have appropriate knowledge and appropriate experience. And it's the responsibility of the charity trustees to appoint a person suitable for that job. Audit is sometimes required for receipts and payments accounts, but the audit opinion will be very slightly different from normal. It will be an opinion about the accounts properly presenting the financial transactions for the year. That's a little bit different from a normal audit opinion. Audit would perhaps be required for receipts and payments accounts where there was a requirement from a funder or a specific requirement in the charity's governing document. So again, be aware of what's in your governing document and be aware of what your funder requires in terms of accounts. So, after all of that information, where can you find out more? On our website, we have a range of good guidance about charity accounting matters. For example, we have a guide to charity accounts which provides a good overview of all the rules. We also have a work pack specifically designed to help you prepare receipts and payments accounts, and we've seen some of the extracts from some of the templates on the slides here today. There are templates available in the work pack to help you prepare each of the 5 parts of receipts and payments accounts that we've talked about. You can complete these on your computer, you can print them off and complete them by hand, or you might want to use them as a checklist to make sure that you're getting all the legal requirements correct first time. Our Trustee Annual Reports, Good Practice and Guidance document is also a really valuable tool, particularly if in the past you as a charity trustee board haven't been very involved in actually preparing your trustee's annual report and you want to make a lot of improvements there. The guidance document will really help you to understand what the legal requirements are and help you to have conversations to think about how you plan to write your trustee's annual report, how you're going to gather information to include in the report, and how you're going to bring all of that together. I also referred earlier to our reserves fact sheet that we have on our website. This is a very short, very simple fact sheet which will help you as a trustee board to have a good conversation about what reserves level might be appropriate for your organisation. Keeping up to date with matters that we have going on here at OSCR is really simple. If you haven't already signed up for our newsletter, OSCR Reporter, please do so. You'll find a link on our website. Our website is shown here in the middle icon, www.oscar.org.uk. There's lots of really helpful information there. There's guidance documents for charity trustees, and there's lots of news pieces which are regularly featured on our website. We're going to be doing other webinars about charity accounts. The next one that I'm going to record soon will be about accrued accounts. And if you have other topics and other questions that you'd like us to cover in future webinars, then please drop us a line at info@oscar.org.uk. Thank you very much.